Well, ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. In this report, I'm going to take a look at some of the technicals as we head into the FOMC rate decision. What levels are in play? What are the risk levels? What are the target levels? What can we expect on a more hawkish or more dovish Fed? So let's get started. We'll start by taking a look at the euro versus US dollar, and what is significant here on the daily chart are these levels right through here. We had swing low here, swing low right here, and then we moved to swing highs through here before the market started its rotation all the way to the downside right here. So this level right here is being revisited in the month of January. We got within, I want to say about 7 to 12 pips of those areas. By the way, these levels come between around the 109.38 to 109.43. So I put a horizontal line near 109.40. The high price that we saw in the month of January came in at 109.288. So just around 10 to 15 basis points away from getting outside of that range. And this is a range that we're going to be watching on the top side of the market. If the Fed should be more dovish in their comments, maybe signaling that the potential for the Fed to ease policy if inflation comes down, if unemployment goes higher later in the year is a possibility. That might be something that gives the dollar a move to the downside. Well, we don't know. It's a market's reaction. What do they feel? What do they, it could go either way in trading here today, and the interpretation is going to be very significant. And we don't know until what he says, and he may slip up. He may be more hawkish, maybe more dovish. We will see. Anyway, getting above the 109.40, 43 area is going to be key. For the upside from a technical perspective. If we're able to do that, then we'd start to look toward this swing area through here near the 111, 111.30 area. That's where all these levels come in. We did move above it here before rotating to the downside here. But 111.02 to 111.31 is going to be the target for further momentum in the upside for the euro versus US dollar. We've been consolidating this area here. The market's ready to move one way or the other. If the upside, we can head up toward that level. It's not out of the question. On the downside, what do we have to look for? What levels are in play? And to look at that, I'm going to take a look at the hourly chart. And if I look at the hourly chart, what do we see? We see the price consolidating in a trading range here over the last 8 or so trading days. I'm going to put a red box around where the consolidation has taken place. For the most part. Now the market did move below this red box right through here, through this little rectangle through here on the downside here. That was during trading yesterday, but we came down to another swing area, which is going to be another target on the downside on further selling. But before we get to that level, what do we have? We have the 100 and 200 hour moving averages. That's the blue and green line right through here. If the price moved below those levels, that would tilt the bias more to the downside in the short term. Those levels come in at 108.68 and 108.74. So write those levels down. If we go below those levels, that's more bearish for the euro versus US dollar. Below that level, we're going to look toward the bottom of this box area. After all, we've been moving above and below and utilizing this floor and the ceiling right here. So we'll be watching the 108.34 level on the downside. Write that number down as well. If we get below that level, we'll be looking toward the 108 level. That's these lows right through here and the swing area right around that area. And if we go below that level, then we're going to start to look toward the bottom of this box through here where the price consolidated, and that comes down toward the 107.57 level. So on the top side, we have the daily area around the 101.11 level, 111.30 level. On the downside for the euro versus US dollar, we have the 108.75-ish type level, and then we're going to look to 108.34, and then we're going to look at 108, and then we're going to look down to 107.60. Those will be the targets for the euro versus US dollar in either direction. Let's take a look at the dollar versus yen next. And if I take a look at the hourly chart here for this currency pair, what do we see? Well, we see the price moving in this outside of this triangle, actually right here, connecting the lows right through here. We move below that level. And so we have a little bit more of a bearish bias. We also move below the 100 and 200 hour moving averages in trading here today. So guess what? The 100 and 200 hour moving averages are going to be a key level on the top side of barometer. Now, if the price should move back to the upside here, we're around 75 or so pips away from that area. So if we get a more hawkish Fed, interest rates moving higher, we could head up toward the 100, 200 hour moving average near the 103.30 level. We'll see what happens there. It wasn't until earlier today where the market was above that level. So all these things are are possible. Note today that the price also stole against this topside trend line. So if we get above that level, that would be more bullish on the top side. So this level, topside trend line, another level to get to and through, and really on the short. I won't even count this level as a level to get above because it's so close. It's, that could happen in the next few minutes of trading, so it doesn't really matter. On the downside, what are we looking for? Well, first level on the downside is fairly close, and that is this swing low right through here at 129 level. So 129 level, get below that level, that becomes a ceiling now for the dollar versus yen. It represents these lows right through here where we found support a couple times through here, and then we found support a couple times right here near that 129 level. Get below that level. A new ceiling is in place here for this currency pair, and we'd expect further downside momentum going forward. Then we have then we're just going to start to look toward our other lows through here. You can see where they come in at. They're varied and different, but 127.55 level, 127.21 are going to be targets on the downside on further selling pressure for the dollar versus yen. That should be the roadmap for us in that currency pair. Let's take a look at the sterling versus US dollar next. And if we take a look at the daily chart first, I'm going to bring to your attention these highs prices that we saw in December and January. Those levels came in near the 124.45, 46 level. Let's call it 124.50. 50 level, nice round number. If we get above 124.50 level, that would be further an invitation to move higher in the sterling versus US dollar when we start to look toward these swing highs through here, where the market peaked and then fell to the downside here. That was over a couple months of trading. Remember, this is a daily chart through here, so key area around the 125.98. Let's call it 126. So 124.50, 126, 126.65. And then 127.60 on the top side would be targets to get to and through. We are currently trading right around the 50% midpoint of the range since the 2021 high. That's this high right here to the low that we saw in 2022. And the 50% retracement comes in at 123 even. Nice round number there. So if we move below the 123 level on the downside, it opens up the door for further selling pressure, especially after having this double top up here. We move down toward. I could see the price move back down toward our 200-day moving average over time at 119.59 area. Not out of the question, but that's down the road. It would take a while to get down to that level. Let's take a look at the hourly chart to sort of get a easier view or more close view from this perspective. And what I like here off the hourly chart is this wide but real area here between the 122.09, 122.47 level. Those the different swing levels through here formed a nice area where lots of support and resistance through here. Admittedly went above it here, but then came back down below the area through here and based here before moving to the upside, and we've been above that level ever since, trading in this sort of range through here ahead of this area. So on the downside, we got to get below the 122.09 down to 122.47 level to increase the bearish bias here for the sterling versus US dollar. The 100 and 200 hour moving average are above at 123.60. 62 is the highest of those moving averages. If the price moves above those levels, that would be more bullish for the sterling versus US dollar in the short term. On the downside, get below the low price that we saw in trading last week near the 122. Get it here. The 122.62 level, get below that level, opens, and then look toward this 122.09 to 122.20 level. Those will be our targets. So there you have three of the major currency pairs that most people trade. And look at the technical levels that are coming in play for those currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.